Top three things in my notebook this morning. Number one, the United Kingdom. Number two, the euro versus the dollar. And then finally, that sketchy price of oil. So first on the United Kingdom, fantastic economic data, not surprisingly, continues in the UK as a strong currency continues to perpetuate both frustration by the economics department of Keynes and the people's purchasing power continues to improve. So what's interesting about the UK, by the way, is that the FTSE is trading down on good news. The FTSE, of course, isn't completely the UK. But again, when stocks don't go up on good news, you do have to start to take at least some kind of frame of reference there that we may be closer to the top than the bottom in the UK, which is, of course, a country that we very much like from an economic perspective. Now, point number two on the euro, which has got to hold this level or we're going to take it out. I mean, at the end of the day, we like the euro at $1.35. If it holds versus the US dollar at $1.35, that is long-term tail support. So again, we're looking for a catalyst, of course, which is next week. We think the Fed gets easier at the meeting. So again, the Fed gets easier, which would be dollar bearish and euro bullish. So again, a lot of people are caught or in this euro devaluation trade still. But don't forget, it is a currency war, and the U.S. gets to go next. Now, finally, the price of oil is reacting in kind. If the Europeans have a policy to inflate and the Americans have a policy to inflate, guess what you get? Inflation. Imagine that. So again, Brent oil, which is what the Europeans are going to feel more precisely, continues higher this morning, up another 0.5% to over 110. We've been saying it's going to 120. That looks likely in the summertime here. So for both Europe and in the U.S., from the WTI perspective, you're going to still get that inflation accelerating on the energy complex, in addition to food prices, which are up over 20% for the year to date, with U.S. rents at all-time highs. So that's not a good thing. Inflation accelerating is going to slow growth, and all of Old Wall Street is going to have to take down their GDP estimates as we get into the third quarter. So those are your top three things.